Is there a valid reason, or that we can hang our coat on, why on this random Tuesday in September the market should fall so sharply?
Yeah, day after Labor Day, people coming back from the long weekend, the kind of unofficial end of summer. Remember, September is notoriously a difficult month
Right.
for the markets, and we're seeing that really clearly today. I'm not so sure whether or not there was a catalyst. There are concerns about a slowdown in China, and obviously that would impact semiconductors, the chip sector, broader tech sector, extremely. They are very sensitive to any moves out of China. But I think Nvidia earnings, while they were good last week, they weren't as great as we're accustomed to. And investors are trying to grapple with, are these valuations reasonable? The Magnificent Seven traded a very lofty premium to the rest of the market. So I think we might have this period of time where investors have to just figure out what's the true fair value for companies like Nvidia, Alphabet, Meta, et cetera.
So that is a classic, if you will, repricing of risk within individual categories and genres and sectors.
Yeah, definitely. And if you look at what happened today, Richard, we did have a bit of a rotation. It fizzled out at the end of the day because it was a really gruesome close. But at one point, we were looking at utilities and staples and real estate all higher. Looks like only staples and real estate finished the day higher. Utilities a little bit lower. But these are the classic bond proxies, big dividend payers. It's a flight to safety. You look even at the NASDAQ 100. I found it amusing that Pepsi and Keurig Dr. Pepper are two stocks in the NASDAQ 100, decidedly not big tech. They were up today while the rest of the market
and
tech was down pretty sharply.
I'm looking at the Dow 30 and our old friends, Verizon, P&G, J&J, Coca-Cola, they are the only bits of green in the market. And that is what one would expect to see, not only, if you will, on a flight to safety, but a sectoral revaluing of risk to safer harbors.
Exactly. Investors realize that
Right.
a company like Nvidia, to be fair, does pay a dividend, but it's tiny. A lot of other big tech companies pay very small dividends. If you want yield, you really have to go into those safe haven staple companies that have steady earnings growth. And Berkshire Hathaway, let's remember there, doesn't pay a dividend famously, but owns a lot of stocks that do, including Coke. Berkshire Hathaway hit another record high today. Warren Buffett's company, still worth more than $1 trillion and getting bigger by the day.
Final quick thought. It would be perverse, though, bearing in mind economic growth, the improving situation, the Fed about to cut rates, it would be perverse to interpret these movements as a potential collapse of the market or anything like that, would it?
I think it would be. We didn't have and don't seem to have any inklings of a Lehman-like event, heaven forbid, to go back to 2008 for those who remember it. We don't even really see the type of stress that would be akin to what happened with regional banks that failed in the spring of last year and happened again earlier this year with NYC, New York Community Bank. Right now, I think investors are just trying to rationalize what they should be paying for stocks like Nvidia. There doesn't seem to be a crisis looming. Hopefully, the jobs numbers that we get on Friday will show stable jobs gains, maybe not gangbusters, maybe a slowdown in wages, which would mean less pressure on inflation. And that gives the Fed the green light for that quarter-point rate cut, in a couple of weeks.
Got to. Delighted. Thank you, sir. Thank you.